What's up, guys? Hello, welcome back. Today, we're going to be discussing my simple secret strategy, okay, and we're going to be applying that on volatility 75, as you can see on the screen. Now, this strategy is a scalping method, okay, that I have come to realize that it's really profitable when you apply it as I'm going to teach you, okay. Now, without wasting much of your time, on the screen, as you can see, I have three indicators. On the main chart is envelope. Okay, now the envelope, this is the setting. You can take a screenshot of it and apply to your chart. Now on the indicator window one, I have the RSI. This is it, level 50. Then indicator window two, I have the MACD and also set uh, at, as you can see on the screen. So I wouldn't want this video to take much time. That's why I am showing it to you briefly. But I believe you've gotten what I want you to get. So now this strategy has a way of approach. Mind you, by the way, this is a price action strategy. The indicators on the screen, as you can see, I use them mainly for confirmation. Okay, I don't trade with indicators. I only use them for confirmation. So like I said, one thing you need to look out for in this strategy, whenever you open your chart on the M1 time frame, if you zoom in, you look out for the M pattern. Okay, now the M here that you might want to take care of is the red lines of the envelope. Okay, now this is what I mean. This red envelope line, as you can see, it formed what? The red envelope line formed an M. Okay, now where is the neckline of this M? This is it. This is the neckline of the M. Okay, so if you notice, it moves with price. The corresponding neckline of the M is this particular one. Okay, now I didn't look out for this M. This is what I look out for. Okay, so when you see this happen, you pick your horizontal tool and place it here. Then where is the highest point price formed before the neckline? This is it. Okay, this is the high point where price formed before it gave us this neckline, and also comes to form the second leg of the M pattern, or the second head of the M pattern. So whenever you notice this happen, you look out for what I call a connecting line. 1-2 touch. The 1-2 touch. The 1-2 touch, mind you, is to form within these two lines, which is inside the space. Okay, now the 1-2 touch I'm talking about is this one and this one. It gives you a first and a second touch. You connect them uh with your line, and when you do that, this is what you get. Okay, the 1-2 touch. When you do that, mind you, this has already formed. Okay, and the neckline broken. Okay, when that happens, you connect these two touches, extend it to the future. Okay, then this is the important part. Between these two touches, you observe something. Between this first and second touch, I want you to observe that there is a base, or there is a low in between this 1-2 touch. This is the low in between the touch. So you move this horizontal line. Okay, you move this horizontal line to touch the base. just at this point. Okay, this is the 1-2 touch, and this is the base. So what we want is for the price to break this base, okay, give us a second high, and mostly this second high does not touch the trend line. Okay, gives us a second high, which is this, okay, which is this high, and on most occasion it doesn't touch the trend line. Okay, now when it gives us this high, we expect price to come and break this low. Okay, we expect price to come and break this low and give us another low. So whenever it forms this high that doesn't touch the trend line, you move down your horizontal line, and that becomes our line of interest, line 1 of interest. So like I said, price comes again and breaks this low with a candle body close below. Okay, this is what I mean. This is the low that formed before this high. Price comes to break it. Mind you, here it only wicked it here. It only wicked it here, but it perfectly broke here with candle body closure before a pullback up. So now this point, because of our this place becomes our second line of interest. You now move your second horizontal line to this particular place. Now when this happens and you notice that price is beginning to uh, retrace back upwards, you can easily pull your your rectangle tool, connect the two lines of interest. When you do that, you notice there's a dot. Okay, there's a dot in between the rectangle tool and this dot is at 50% mark between this and this lines of interest. Okay, this dot is between the two lines of interest, that is the 50% mark of the space between the two lines. So now what you need to do is to put a horizontal line there and expect price to pull back, mitigate this 50% mark, enters a discount zone, okay, or a premium zone rather, so that we look for a selling signal in order to short the market. Okay, now at this point, let me delete this too. I believe we've gotten what I'm trying to explain there. Okay, so now at this point of pullback, you notice that one, price has touched the trend line. Okay, and secondly, price has retraced to a discount zone. Okay, where we can easily join the market because we are already assured or sure that the market makers have decided to take the market or take price low. Okay, they've decided to shut price down. So at this point again, apart from the fact that it has touched the trend line, it has retraced back 50% to 61% level. Okay, that's from here to here. Using your Fibonacci tool, let's get the exact retracements level. Okay, from here to here, yeah, you can see that the price retraced up to 61.8 retracement level. Okay, so but we're interested for it to get to 50 and slightly beyond. So far it touches the trend line, as you can see on the screen. Okay, so let's take out the Fibonacci retracement. Secondly, or thirdly, if you take a look at this point, you see that we have a bearish engulfing candle here that has been mitigated by this retracement upwards. This bearish order block has been also mitigated. So you see, we have a lot of tools to confirm that this is a valid setup. Okay, we have a lot of reasons to confirm this setup. Okay, so what do we do? Okay, what do we do? Mind you, this is M1 time frame. So if you would like to strike or jump in, what you do is, at this point, you notice the nature of the candlestick formation. At the close of this red candle, an aggressive trader may decide to short the market and place his stop loss just place your stop loss just above okay. You can decide to short your place a sell here and put your stop loss just above this curve here or above the wicks. Then a conservative trader may decide to wait for price to trade below the envelope. Okay, now once price breaks the envelope, you wait for a slight pullback. Then at here, whenever the price touches the red envelope line and is beginning to pull down, or it's beginning to weak, you enter for a sell. Okay, you enter for a sell. As you can see, price sold all the way down because it has been confirmed already that the sellers have taken dominance. Okay, for your take profit level, you can use Fibonacci extension tool. Okay, if you use your Fibonacci extension tool, putting it starting from the swing low point to the swing high, you can decide to take your TP1 at 161.8. You can make that your TP1. Okay, that is to say, you sold from here up to this place. You can take that as your TP1. Then for your TP2, you can go for the next extension level, which is 261.8. For TP3, you can equally go for the next extension level, which is 423.6. Okay, it is 423.6. Okay, hope you can see it, guys. Then you might want to know the role of the indicators, the RSI and the MACD below. Like I said, I use them for confirmation. At the point where you short the market, at this point, okay, if you look at the corresponding indicators below, let me use the cross here At this point, you notice that the blue lines of the RSI is below the 50, and the histogram lines, okay, of the MACD has gotten to zero level and is dropping below zero level. Now that is a clear confirmation that price is about to drop rapidly, just as you can see by what played out. Okay, now that is it, guys. Let's meet another day for a tutorial on this particular strategy on a different instrument. Thank you. Have a good day.